Good morning, everybody. Welcome to the Moving Markets Podcast. It is Thursday, September the 4th, 2025. U.S. stock market has been open for almost exactly a half an hour as we're starting today. And all three of the major indexes so far, and I say so far because the day is very early and there's a lot going on. So far, they're all up. You've got none of them up very big. It looks like all three indexes up right in the neighborhood of 10 to 15 100ths of a percent. So I just all of them up about 1/10%. That's a pretty small move, but like I said, the day is very early, very young. Things could move quickly. Things could move a lot. We'll see what's happening. The biggest thing going on so far in the news, there's a lot of ancillary things. There's a lot of little things going on around the edges. The biggest thing going on in terms of market driving news is that you had the jobs data come in this morning. Let me get I've got two different websites I go to for the economic data. Let's look at this one. You had the ADP employment report came in. We were talking about this yesterday and the day before. The prior month came in at 106 new private payroll jobs. Consensus was this was going to be down to 68, which would be quite a drop down. Actually came in at 54. So even a bigger drop. And I think I said yesterday or the day before, my hope was that it wouldn't come in too different from what the expectation was. That's a pretty big drop below what the expectation was. So it's a two-edged sword. This is not good news for the economy. You don't like to see jobs slowing down this much, but it's good news from the perspective of it almost, I'm not going to say it forces because it doesn't force anything, but it comes close maybe to forcing the Fed to do a rate cut. Yesterday, this number right here, and I don't know if you can see that on your screen or not. Yesterday, this number right here was 91.7. Now it's 97.6, which is what the betting market is suggesting are the chances the Fed will cut rates when they meet 2 weeks from yesterday. So very, very small. 2.4% are thinking that rates are going to stay the same. 97% thinking we're going to get a 0.25% rate cut, a 25 basis point cut. Not anyone really betting on a 50 basis point cut. Although I hear some analysts that are out there speculating as to that being possible. In the midst of all of the indexes being up, you've got a handful. I'm a little bit surprised that the NASDAQ, and granted, the NASDAQ is barely holding on to gains. In fact, NASDAQ might be just on the verge of going negative right now. In fact, it just did. And this does have a little bit of a delay on it, but apparently the NASDAQ has just gone down negative. I was going to say I'm surprised that the NASDAQ is still up because you've got AMD, you've got Crowdstrike and CoreWeave, you've got NVIDIA, you've got Palo Alto Networks, you've got Palantir. They're all trading in the negative this morning. Meta is one of the only NASDAQ stocks that is trading up, and Meta shot up at the open of the market, was up at one point in time almost 20 some odd dollars, forced me to kind of do an emergency close of my Meta position, and now they're suddenly, well, they're still up almost $11 a share. So I'm not going to say that I regret having got out of that position. I'm thinking maybe I should have been just a little bit more patient, but a definite slide in the NASDAQ. Not like it's down a lot. It's 0.05%. So, but the NASDAQ has, and everything else looks like it may be turning bearish as well. Now you've got the Dow barely up and the S&P barely up. So whatever was causing the good feelings right at the beginning of the market in this first 35 minutes or so that the market has been open, that's all been kind of fading away. I heard some people, some analysts speculating that maybe we were not going to have a typical September like we normally do. September traditionally being the weakest month in the stock market. Um, I don't know. It's we're on our third trading day of the month right now. Tuesday, yesterday, and today is early, so we're not even all the way through a third trading day. We'll see where things take us. We'll see what's happening. Um, there's not a lot of other news driving things this morning. I think everyone is going to be kind of in this, sort of waiting on pins and needles mode until they see what the Fed actually does. And I think there's already something of a baked in cut. I think you've already got a lot of investors and a lot of traders are looking ahead and saying, the Fed is going to cut rates. It's not moving the needle right now. When we get to a week and a half out or 2 weeks out, and they actually make that rate cut, which I believe they will do, it's hard to know how the market is going to react at that time. It's hard to know if the markets are gonna do much of anything at all. Yeah, Jeff made the comment. Jeff just commented on our chat line. Cutting interest rates because the economy is slowing never leads to good returns in the market. Compare that to cutting rates to stimulate growth. Yeah, it's a tough one. I think the Fed. Look, I'm not a fan of Jay Powell. I've made that pretty clear. I've not been happy with the things that Jay Powell has done. But I agree with what Jeff is saying, and I'm going to say the same thing in kind of a different way. I think the Fed is in a really, really difficult position right now because there is some concern about inflation coming back up. There is some concern about the fact that inflation, it's down dramatically from where it was a couple of years ago. The rate of inflation has slowed. It's remained slow. It's not like inflation is increasing dramatically in these first 9 months, 8 months that President Trump has been in office. But inflation is not coming down, and so there is legitimate the concern about inflation popping back up and getting ugly again. But interest rate cuts could spur the job markets. Companies, when they don't have to pay as much on their debt, when they can borrow more money at a lower interest, when they can refinance existing debt, it frees up capital and they can invest in more employees. They can invest in more R&D. They can expand their supply chain. There's a lot of good things that can come for companies and specifically for the labor market with lower interest rates. So it's a tough situation. The Fed's dual mandate is one of their dual mandates is full employment. And in order to get full employment, you've got to do things that will help the labor market, and lower interest rates would help the labor market, but it could have that adverse side effect of tipping the inflation back in the direction that we don't want it to be going. So it is it's not changing my mind, and I'm not feeling super sympathetic. I'm still not a fan of Jerome Powell, but you have to admit he's in a tough position. The Fed is in a tough position. It doesn't help the turmoil going on in the Fed with the Fed Gov Lisa Cook, who I think the president is justified in wanting to get rid of her. It doesn't help that you've got that going on. So tomorrow's report will add to everything that's, it'll add to the narrative. I think tomorrow's report is also going to come in weak. The expectation for full non-farm payrolls is 77,000. That's up a little bit from what the prior was. I think this number is going to come in low as well. I think you're going to have a miss on this number. It'll be really interesting to see if there's any change at all in the average work week, in the unemployment overall, the unemployment number. That'll be interesting to watch and see if that creates any kind of a dynamic that changes things. But I expect this to be a weak number, and I expect it to miss the consensus by a little bit, similar to what the private payrolls did. So we'll see what happens. Like I mentioned, we had to bail out of Meta. We took a loss on that. That's unfortunate. As far as our other open trades right now, I'm going to make an adjustment to CrowdStrike sometime today or tomorrow. That's the only other trade that's really bothering me right now. CrowdStrike just continues to trade down. We've got a bear call calendar that just gets further and further away from the money. I kept thinking CrowdStrike was finished going down and would make a rebound, but this is a pretty steady trend that I think now might continue. So I think we're going to roll CrowdStrike into a more aggressive bear call, but without getting too aggressive so that we don't get in a situation like we were in with Meta this morning. I did send out an adjustment to Home Depot, rolled our short call on Home Depot out one more week and up a little bit. They were up over, I believe Home Depot just a little while ago was up over, what was their high? They were up over 412, I think, just a little while ago. Now they're only up 408, but still that puts our short call in the money. This is a triple play trade, by the way, so we made a move on that. I think that's it for today. I think that's what I have for this morning. I'm still not, I'm okay with missing a new trade this week. I really am. I keep looking for something that just is kind of a standout that would make a lot of sense for a new trade. But some of this uncertainty and this back and forth and this wobbling in the market is making me admittedly a little gun shy about opening a new trade this week. So probably now that it's Thursday, still a possibility I'll send out a new trade. I'll give people plenty of notice if I do, but I think it's unlikely that we'll do a new trade this week now that we're this far into the week and I still haven't done anything. So I'll let you know, give you plenty of advance notice if that changes. In the meantime, have a good rest of your Thursday. I'll be back on live tomorrow morning. Bye-bye.